Sissener Canopus fell by 1% in January, with an average market exposure of 53%. This 1% compared to 0.5% for the Oslo OBX, 0.7% for the Euro Stoxx 600, and 1% for the S&P 500 in the US. January was marked by renewed concerns related to COVID-19. In particular, the vaccination rollout was slower than expected, with fears regarding access to vaccines, especially in Europe. In addition, 3 new variants of the virus were identified, and as a consequence, more severe lockdowns have been enforced in Europe, and the recovery in growth expectations has been delayed somewhat. The fund's best contributor was ARCA, which rose 22%. ARCA Horizon, ARCA's renewable energy holding company, was spun off and IPO'd in January. ARCA Horizon primarily consists of companies involved in solar and wind power and carbon capture. The company is also planning to build capability in the clean hydrogen segment. This is a segment we are following closely. Canopus maintains an indirect exposure to ARCA Horizon through its ownership position in ARCA ARSA, which owns 77% of ARCA Horizon. In addition, and in connection with the listing, Canopus subscribed to the ARCA Horizon convertible bond. The second best contributor was the insurance company Storebrand, which rose 3%. E-learning company Kahoot! Was also a strong contributor in January, with an equity price increase of 14%. The price rose 14% in early January on news that the Q4 result will be better than previously guided. In December, SoftBank increased its stake in Kahoot! To 10%, and it was further increased to 16% in January. And at the end of the month, the company announced plans for an equity listing in the US. The insurance company Prudential was among the fund's negative contributors, with an equity price drop of 13%. Prudential announced plans to list the company's ownership stake in the American life company Jackson, and also reported a share issue in connection with the listing. Our view is that this listing will be positive for Prudential in the longer term, as it gives exposure to the rapidly growing Asian market for insurance products. The investment team maintains a cautiously positive stock market outlook for 2021. Equity valuation metrics are high relative to historic norms, and we expect interest rates to rise as inflation picks up. Nevertheless, we expect market focus to shift back to underlying growth trends and continued stimuli. And our investment strategy is to maintain a balanced portfolio with emphasis on quality companies that are sensitive to growth and interest rates.